An excerpt from the book Where Keynes Went Wrong by Hunter Lewis. Keynes. Interest rates are too high. The rate of interest is not self-adjusting at a level best suited to the social advantage, but constantly tends to rise too high. Comment from Lewis. This is a frontal assault on the entire price system. Keynes does not define any of his terms. He does not say what the social advantage is. He does not tell us how we will know when interest rates have fallen far enough. Nevertheless, he has told us something important, that the price system cannot be trusted. It is important to keep in mind that interest rates are a price, the price of borrowed money. They are not only a price, they are one of the most important prices in an economy. All prices are interconnected, but this price in particular affects all other prices. Businesses depend on prices to give them the information with which to run the economy. If the price system for interest rates is broken, no part of the price system is unaffected. If the price system is hobbled, it is a very serious matter because attempts to replace market prices with government-imposed prices have not generally been successful. As Øystein Dahl, a Norwegian oil executive, said about the Soviet Union, it collapsed because it did not allow market prices to tell the economic truth. As a rule, we should be extremely wary of any argument that begins by throwing the market price system out the window. But for the moment, we will withhold further judgment and see where Keynes is going. Keynes. High interest rates keep the world poor. That the world, after several millennia of steady individual savings, is so poor is to be explained by high rates of interest. Comment from Lewis. Fear of theft, including theft by government, is a more likely explanation. Why is humanity still so poor? Is a good question. As noted in the author's Are the Rich Necessary, even the tiniest sums compounded over long periods become unimaginably large. $10 compounded at 3% a year for 1,000 years would produce a sum over 2 times the world's total wealth today. Why then has humanity not done better? What has held us back? Any answer to this question has to be a guess. It's not really a fault of Keynes that he offers no evidence for his particular guess. But are high interest rates really the heart of the matter? Even Keynes admits that there was always an issue of safety, that rates were high in part because it was not safe to lend. Would it not be reasonable to regard lack of safety as the primary variable here, with high interest rates just a secondary symptom? In most societies throughout history, it was not safe to own property, much less lend it. The best way to safeguard property was to hide it, which made investment difficult. Why invest if someone else will shortly steal the fruits? Moreover, throughout history, that someone else was often neither a thief nor a strong man. It was often the state itself. A well-functioning state monopolizes the use of force. It can and does use that force to tax or even expropriate. Is this not one of the principal reasons that humanity has remained so poor? Paralysis of private investment because of fear of seizure by the state? If so, should we not pause before asking the state, as Keynes does, to take a larger and larger role in the economy?